Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Key economic events this week included retail sales, existing home sales, and housing starts in the US, inflation in the Euro area and the UK, car registrations in the EU, and German wholesale inflation and UK retail sales. In addition, China's GDP, retail sales, and youth unemployment, interest rate decisions, and Japan's consumer price inflation and international trade data were also in the market. In this slide, you can review all key economic data released last week from the US, EU, China, Japan, and India. Now we will focus on the US data. Retail sales unadjusted for inflation advanced 0.2% in June, indicating resilient consumer spending. Core retail sales, which excludes large and one-time items, rose at a faster pace of 0.6%. Existing home sales declined 3.3% to a seasonally adjusted annual rate of 4.1 million, the slowest pace of home sales in 5 months, the National Association of Realtors reported Thursday. There were just 1.1 million homes available for sale at the end of June, about 3 months of supply, far less than 6 months of supply needed for the normal market functioning. Despite the fall in sales, median home prices edged slightly lower to $410,000 from $414,000 a year ago. Home sales have been on the skids, not for the lack of demand, but for the tight supply. Home sales in June dropped to the slowest pace since 2009 and dropped 18.9% from a year ago. Housing starts declined 8% in June, building permits fell 3.7%, and completions declined 3.3% from the previous month to around 1.4 million homes. Housing starts have peaked in late 2022 around 2 million and have been declining since then. Let's turn our attention to Europe. The consumer price inflation in the Euro area was confirmed at 5.5% in June, the lowest level since January 2022. However, the core rate of inflation accelerated to 5.5% in the month from 5.4% in the preliminary estimate released by Eurostat. Overall inflation declined because of a sharp decline in energy prices compared to a high level a year ago, but core rate of inflation, which excludes volatile energy and food prices, stayed near the peak of 5.7%. Service sector inflation rose to 5.4% from the previous estimate of 5%, indicating deeply entrenched inflation in the economy. The elevated core inflation supported the European Central Bank's case of raising rates because of the inflation rate is still well above the target rate of 2%. Consumer prices in the UK declined to 7.9% in June, the lowest level since March 2022, the Office for National Statistics reported Wednesday. Core inflation, which excludes food and energy prices, eased to 6.9% from a 3-decade peak of 7.1%. Despite the slight easing of inflation, core and overall inflation in the UK remains well above the Bank of England's target rate of 2% and supports the case for higher rates at the next meeting of policyholders. Passenger car registrations in the European Union increased 17.8% in June to 1 million units, the European Automobile Manufacturers Association reported Wednesday. Passenger vehicle sales rose for the 11th month in a row, with sales rising in Germany by 24.8%, Spain by 13%, and France by 11.5%. Battery-powered electric vehicles rose 66% to 158,000 units, accounting for 15% of total sales. Despite the improving trends, passenger vehicle sales are still down 21% from pre-COVID sales in 2019 in the comparable period. In other economic news, UK retail sales rose 0.7% in June from the downwardly revised 1.0% increase in May, the Office for National Statistics reported Friday. Retail sales rose for the 3rd month in a row on a monthly basis, but declined 1.0% in June from a year ago, the 15th month of decline in a row. Let's review economic data in China. GDP in the second quarter rose 6.3% from a year ago and advanced faster than 4.5% in the first quarter, the National Bureau of Statistics reported Monday. But the growth rate fell far short of expectations, and economists are raising questions about China's 2023 target rate of 5%. In other economic news, retail sales rose 3.1% in June from a year ago, slower than 12.7% in May, and industrial production advanced 4.4% compared to 3.5% in May. Private sector investment, a widely watched indicator for confidence in the private sector, declined 0.2% from a year ago in the 6-month period to June, from 0.1% in the first 5-month period ending in May. Weak exports growth and weaker retail sales are keeping the private sector from adding to investments. Fixed asset investment, the government's primary focus in ramping up infrastructure development, rose 3.8% from a year ago in the first 6-month period to June, down from the growth of 4% in the first 5 months to May. Jobless rate among the 16 to 24 age group jumped to a new high of 21.8% in June from 20.8% in May. Higher youth unemployment levels suggested weakening demand from the manufacturing sector. Separately, the People's Bank of China held its loan prime rates as expected. China's mixed data suggested that economic recovery is slower than expected and more uneven than estimated, and policymakers are struggling to devise plans in the face of slowing exports and the global supply chain diversifying away from China. In other economic news in Asia, Japan reported its first trade surplus in 23 months in June after the cost of imported energy declined. Japan's exports increased for the 28th month in a row by 1.5% to 8.7 trillion yen, and shipments to China declined 11%, but to India surged 18.4%. Imports continued to decline for 8th month in a row, reflecting a sharp decline in energy prices. Japan's consumer price inflation and core inflation rose 3.3% in June from 3.2% in May, suggesting that prices are finally rising but at a slower pace than anticipated. Let us now shift our attention to stock markets around the world. Market indices in the US and Europe gained but fell in Asia. The Dow Jones Industrial Average rose for the 10th day in a row, the longest streak since August 2017. Crude oil extended gains for the 4th week in a row, and stocks in Shanghai and Hong Kong traded down on uneven economic recovery. India's indices fell after tech services providers reported weak growth, and wheat prices soared as much as 10% on supply disruptions in Black Sea corridor. The euro, the British pound, and the Swiss franc traded at 16-month highs. Wheat prices soared as much as 10% after Russia ended its agreement to permit exports of grain from Ukraine and stepped up its bombing campaign on Ukraine's seaports and storage silos. Moreover, dry seasons in the U.S. also forced analysts to lower yield estimates for the ongoing harvest, raising questions about the government's predictions of higher wheat output. The sudden surge in wheat prices stoked fears of another cycle of inflation. Natural gas prices also surged 6% on Friday on top of 4% rise in Thursday's trading to €30 per megawatt hour on the rising demand for gas-powered electric power plants after record temperatures across the continent drove electricity demand for air conditioning. Despite the spike in natural gas price and demand for natural gas, storage of energy fuel is nearly 82% full in the region, assuring ample supply. Let us now focus on individual stocks. Tesla plunged 10% after company announced maintenance plans and estimated lower unit sales in the current quarter. Microsoft and Sony struck a deal to keep Activision's popular game on the PlayStation gaming console. Richemont, the Swiss luxury company, said quarterly sales in Europe and Asia Pacific rose but declined in the Americas. Bank of America, PNC Bank, and Bank of New York Mellon reported a surge in net interest income on higher interest rates and a decline in average deposits in the latest quarter. Volvo reported higher revenue and earnings in the second quarter, but new orders declined in Europe and in the U.S. Goldman Sachs said quarterly earnings and revenues declined after investment banking fees plunged and losses in the real estate sector mounted. ABB reported strong gains in quarterly sales and earnings after demand for systems for process industries rose. Anglo American, the big mining company, said overall production rose 11% and copper output soared 56%. Swedish Electrolux reported weak consumer demand drove down second quarter sales by 8%. Looking ahead, what is on economic releases and earnings calendar? US GDP data releases on tap, and economists are anticipating 1.6% growth rate in the second quarter. The Federal Reserve is scheduled to release its rate decision on Wednesday, and investors are anticipating the rate hike of 25 basis points. On Thursday, the ECB is also expected to raise its main rate by 25 basis points to 4.25%. After 8 rate hikes since July 2022, investors are hotly debating when the ECB is likely to pause. The Bank of Japan is also scheduled to announce its policy decision and tweaks to yield curve policy after steady inflation and robust industrial outputs in recent months. Leading tech companies are expected to announce earnings this week, including Meta, Amazon, Alphabet, and Microsoft. Boeing, 3M, MasterCard, and Verizon are also on calendar. We will see you next week.